Good morning and good afternoon. And Acer, good morning. Good morning. Hope everyone had a, good 4th of July. And in keeping with, we won't do it again tomorrow, but the colors, we got some 4th of July coloring here. And hope you all had a wonderful 4th. We did as well. Fireworks weren't too bad on Ted. And he's glad it's over. It's not exactly his favorite day, our golden retriever, but he was in the pool quite a bit, quite a bit. We were trying to exhaust them. He spent well yesterday he was in the pool for a couple of hours, and then, which he ordinarily doesn't do both. Boy, the dog was just ecstatic. And then I took him to the dog park on top of it. So he got the pool and the dog park. Usually he goes for a walk afterwards. When he realized he was going to the car to the dog park, he literally came off of all fours. It's like, it's going to be a double hitter. Let's take a look at the markets. We want to remind everyone. Oh yeah, it is the worst. It is. Yeah, thanks. None of our dogs have ever been crazy about the 4th, and our golden before was really bad. Ted's getting a little bit better. We get him really good and tired, and then Susan's got some ointments she puts on him, some smell ointments, seems to calm him down. But we can't take him outside. I mean, you can't. If a firework goes off, God, and the leash breaks, I mean, that dog is going to be gone. Just, I don't mean to be a party pooper when it comes to the fireworks. You know, the great fireworks show is great. I just not crazy about, doing it right, in the neighborhood, you know, and but it's, every year it's a different group. But anywho, fortunately though, well, they're legal here in Florida, and they got tents on them, so it's really crazy. And but it's only legal for like a 36-hour period, and that should do it. So we're continuing though, Acer. We're running. So let's just give an update as to what we're doing and what you're looking at. We have Swing Machine up, right? And we're not trading Swing Machine right now. And in this view, oh, your town made it illegal? Well, that's good. I'd love to see that. Yeah. It really, when you stop and you think about it, it's not just the animals, post-traumatic stress guys, older people, really young babies. And then these fireworks, it isn't just bottle rockets. I mean, these guys are setting off like, sticks of dynamite. And I mean, just really, rattle. Um, I tell the story. It goes back a few years ago. I had a neighbor. He stopped doing it. He came in and it was like one after the other. It was like a stick of dynamite. Boom, boom, boom. We got up to like a 20 count, and we live on what was a golf course, whatever. So he's like right out back. This was back some years ago, and everyone else called the police. I guess I should have just let them deal with it. I went out to talk to him, which was a mistake because he was hammered. But I get out there and I'm like, what are you doing? Lighting off fireworks. I'm like, yeah, obviously. But I mean, my God, He goes, well, I'm celebrating my wife's birthday. I'm like, well, Jesus. What is he like? He's like 48, 50 years old. We're going to have like, we're up to like a 30 count of these things. Are you kidding me? He was lighting one off for every year. I'm like, come on, bud. Will you? I mean, you would expect it from kids, 14, 15-year-old boys. I get it. I did it. But, 48, 50-year-old man celebrating his wife's birthday in my backyard, blast them. Any case. uh, um, so we get a couple of things going on. We want to show you Swing Machine. What's happening here? The strategy is firing up here. Now, this strategy that we have, I'm just going to say this about it. It is not real active. We have some strategies that are real active. This is a beta strategy that is not very active and is meant to run and run and run. Now, can you scalp it and do some things? Yes, you could, but you won't get a whole lot of trades. It'll be, and I'll review some of the statistics that we're aware of. Now, we had and I did miss it. I wasn't here for it. We had a run up of some $2,500, and it came back, and it ended up taking a loss. So it did take a loss, and that's kind of a cardinal sin to have been up that much and to come all the way back. Now, this beta strategy doesn't have right now a lot of curbs built into it. It will. We will build them in. I just wasn't here for it. But we kind of want to, and we're videoing this, by the way, for our members, so that they can, those members that aren't here, they don't watch on YouTube, they watch on Zoom virtually every day that the market is open and running. We have a live Zoom link, and they can see what we're working on. And we try to, capture a lot of it on video to try to maximize their time and to help, stimulate some thoughts and some ideas. This particular strategy is called the SMC, for Stock Market Caddy, Stinger. And so the Stinger, well, we'll talk about it in a minute. Let's just, before we get too many changes here, let's look at Swing Machine and see what it is doing. So let me get some markers here, and we'll just highlight and go through this. So on a 5-minute basis, we'll just look at the 5-minute. This one right here, that went off at 9:40 this morning. And if we have members that took that trade, they're up $475 on a mini contract. Micro, they're up $47.50. 10 minis, yep, they're up, $4,000. The NQ was short. There was a nice sell-off there overnight and into the morning, and then it reversed course at 9:15. If you took it long, you're up 1,400. The YM on a 5-minute interval went long at 9:45, and you're up 300. And then the Russell, we'll go ahead and highlight it. The Russell is actually short. And you know what? That doesn't look, yeah, it is. Yeah, it's moving, barely moving. And it's underwater a little bit. It is interesting that, 9:40, 9:15, 9:45, within 5 or 10 minutes of each other. And the Russell is kind of, lagging behind, which could be, sometimes that can be a marker in and of itself. But so we'll keep an eye on it. Gold is in a short mode, underwater a little bit. And then oil is long at 11:15, not that long ago, and up 140. That's what Swing Machine is doing at the moment. And then the VIX on a 5-minute is short. So, and that went short at 10:55. And that would bode that right here that, the bulls are a little bit in charge, a little bit intraday. Now we're reminded by one of our members that we have the Fed minutes at 2:00. So it's probably going to be market moving. The Fed is around now all the time, right? They've always been around. It's just, they're talked about more. I can remember, been doing this a while. I can remember in 2008, 2009, the first time the Federal Reserve was even mentioned as a market player on CNBC. And the lovely grandfatherly Art Cashin said, that's a load of crap. His exact words. That's a load of crap. These people that believe the Federal Reserve is in these markets, it's just they just don't want to admit that they were wrong. That's a load of crap. Anybody who thinks the Fed is in here manipulating these markets is just, tinfoil hat, black helicopter stuff. What a load of crap. And he was in an interview with Scott Nations, who was with Nations Bank, I remember. And he was talking about the plunge protection team. And I damn near fell out of my chair because we knew it to be true. And this is '08, right? This is ancient history now, and really ancient history. And it was like, oh my God, they mentioned, oh my God, and as though it was big doings. And now for God's sakes, look how far we've come or how far back we've gone. Not only, as the Fed talked about, it's talked about every single day. It's like, it's ludicrous, and then of course, yeah, well, the Fed thinks, they're in here buying the spoos. They're buying bonds, they're buying everything. Come on, It was like even, Greenspan, when Greenspan was head of the Fed, he said that he couldn't trade stocks, but he could trade currencies. Oh, lovely. Geez, lovely. Forex, as chairman of the Fed, how many millions than him and his lovely wife. I don't know if you know that he's married to, my dad's nickname for her was Horseface. What's her name? Oh, what is that lady's name? She's a CNBC crank, NBC crank. Let's see. I'll Google it. I can't think of her name. I can see her. Just Greenspan wife. Alan Greenspan wife. What is her name? There she is. Andrea Mitchell. Yeah. My dear departed dad used to call her Horseface. He is too. Any case, we won't go there. And now the strategy, though, so that's what Swing Machine is doing, and we'll get rid of those little blocks that I drew. The strategy that we're running is a beta strategy. We've been running it. We ran it quite a bit last week, and we did well. We had a day where we had a larger drawdown. A drawdown is when you have a trade on and it goes down. The trade isn't over and it goes down more than you're comfortable with. So we built in some technical breaks to it. Now, the first thing that a person can do is, of course, use a stop loss, right? That is a lot of times a Band-Aid, and if you just use a stop loss, which is fine, but sometimes that can introduce more noise into a strategy and be hurtful. So we want to initially, when we have something like that, we want to build in a break. We'd rather have it be a technical break, based on what the strategy is doing. So that's what we've done. And we're running it and collecting the data, collecting the video for our members, and seeing what we have. The strategy this morning was up in that position window, was up as much as $2,500. And I did step away, albeit pretty quick. And what I had wanted to do when I came back into the office, I wanted to come over and look at the trade manager and get this little trade manager here. It tells us what this particular strategy, and we can scroll down. Let me show you actually. And I had every intention of doing this, but I missed it. So let me see if I can. Here it is here. I wanted to see the average winning trade over the last 2 weeks. And the average winning trade, all considered long and short, is 1761 winning. And the average losing trade, average winner on the long side was 2420. And we actually hit 2450. So I really should have been here to capture that. I mean, that would have been a good use of the back test to say, hey, we're up here. And to do it, and because I don't have a trailer or anything like that, which we can do, right? We can do, but I didn't. I would have to go in mechanically and take the trade, off. So I had every intention of doing that, but when I get in, it had sucked back that fast. There was a fast little move this morning. Wasn't that long. So I described to everybody and I made a mistake. But so it sucked back and the machine ended up not losing, but it that those profits went away, and then the machine did in fact take a loss, and our technical break did what it needed to do, and that was keep the loss manageable, and that's it there. So I wouldn't want to see on this technical break, I wouldn't want to see a drawdown, too big. I don't want to see anything like, $2,000 or $3,000 or anything like that. 800 is okay on the NQ. And then she turned around relatively short period thereafter and then took it short again. So, and this is where we are. Now I could mechanically go in and disengage the robot and grab the money and, but I'm not, right. I want to let it run its course. And when you're in Q school, we'll set up views, and it just depends upon what the strategy is and what you're running. And we will try to coach you a little bit. Now, there are some strategies that, you got to be pretty active. You got to get in there and boom, 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 boom. And expect that the strategy doing it. This isn't going to do that. There only been in 2 weeks, there's only been 20 trades, right? And we've only had since Friday or even this week, we've only had like 2 or 3 trades up here. So it isn't, so if you're expecting, something here, just letting you know now, it's not going, we're going to continue to let it run. You're not going to see a lot of trades. Now, if you have a limited amount of time to be in the market and you want to come in and only trade for an hour, this isn't going to be the strategy you want to run. It just takes too long to set up, too long to play out. We have other strategies that we would encourage you to experiment with, and we would do it with the Q school, and it would be a strategy that is meant to run for probably no more than an hour, and just if you can make your money or an amount of money that is decent, in 14, 15, 20, 30 minutes, and then be done. And it just depends upon what you're trying to do. Make sense? Yeah, it definitely has been holding a very tight range, and they're probably waiting, probably waiting for the Fed minutes. And so we'll see how that plays out. Now on the Fed minutes, I mean, it is a bit of a parlor game. Nobody really ever knows, but the last Fed meeting, they didn't raise rates. Some speculation as to what they're going to do in another week, right? I think they meet again like next week, another week or two for July. I'm inclined to think they're going to raise rates again. And so whether they are or they aren't, I would expect, could be wrong, right? And I'm not going to, trade that expectation, but it'll be interesting how the machine does through it. We'll let it play out right through the Fed minutes. I would expect those Fed minutes to say that they're going to more or less hint that they are going, in fact, to raise rates. Why not do that, right? And the Fed minutes, it's such a scam, right? The whole thing is such a joke. But I'm sorry, the Fed, it's Nobody has more contempt for this than me. So, but it is what it is, right? We gotta, deal with it. And they're just a bunch of academic stooges, right? The Fed it's the markets, the world, the world, the world economy. It's run by a banking cartel. And this might just my 2 cents. And the titular head of that banking cartel is the Federal Reserve. And they're nothing more than a bunch of academic stooges. And you talk about a facade. If you see the picture, if you pull up a picture of the Federal Reserve, and it's got this big, beautiful marble building, and it appears to be full of smart people doing smart things, and they're just the wizards. And it's as real as Cinderella's castle in Orlando. It's a facade. It's fake. It's a joke. We don't need a Federal Reserve. It can be run by computers, and they're told what to say, what to do, and it isn't the politicians so much. It's the banking cartel. But so they have these meetings, and they come out and they talk their wizardry, and they look smart, and they don't look smart to me, but the media present them as such. And then they don't even tell you everything that they had to say, because then they have the minutes to what they actually said, right? And they hold back the minutes for like another 2 or 3 weeks, and then they release the minutes of what actually was supposedly said. So that's what's going to be released today, are the Fed minutes of what they actually said. Well, they're probably writing them right now, and they're probably more spurious than the HOA minutes in where I live, for God's sake, and that's another. But so it's just but everybody will be talking about it, right? So whatever the market does today, the news producers of the day will be talking, well, the Fed said this and the Fed said that, and the market did this and the market did that. The big thing that they want is I hate to say this, I don't include our members, and I don't include those of you that come through on YouTube in this. I don't, because you wouldn't be here. But the other masses, the sheeple, they do believe that, and they want them to believe that they're in control of this market, that they're in control of the economic environment. My 2 cents, they are not in control. They are not. Anything can happen at any minute. We have been here. There were instances, you may have, depending upon where your trading careers began and ended, or began, you may not have seen them, you may have read about them, but we have had things called flash crashes, right? Now, I'm not saying we're going to have a flash crash today. Certainly doesn't, we don't have no indication of that, but they can happen. They can happen. We've been here. And when we get a flash crash, the market is moving so fast that you can't, on Swing Machine, you can't even read the numbers. They're green. They'll be green. That's for sure. But you can't even read them. Just it is, it's not something, and basically what it is, what would we teach and what would we suggest in a circumstance where you get a flash crash? Turn your machines off. Turn them off, because they don't happen that much, and we're not interested in playing them. And that's why we will get a flash crash whenever, and we're not, expecting it here. The environment isn't such for it. So I'm not trying to scare anybody, but that's why we get flash crashes, is that the birds in Chicago and New York and, in these big buildings, they turn their machines off, and then the prices, drop. So again, I could, we're just letting this guy run and do its thing. And this is a back test. So for those of you that were here, in the last few days, you've heard us talk about it at the risk of repeating, a back test is a back test. It what happens in the past may or may not happen in the future, and it probably won't, right? That golf ball is not going to land in exactly the same place, exactly, the same set of conditions. But you're probably going to be, 100, from one day to the next, 150 yards out from a particular golf hole. And if you know that your golf club, if you can hit a 7-iron and don't laugh, 150 yards, and we have a professional golfer in our midst, and he laughs, it's like Don hits a 7-iron 150 yards with a hoot. I mean, I think he hits, like a wedge that far. But that can help you get around a golf course. That can help you manage your game and manage your expectation. So that's why, we've started showing this a little bit, and we started getting questions from YouTube. And I thought, that's fair enough. They wanted to know, like, what is the winning percentage, and I would start to say it and try to qualify it a little bit. And I wasn't trying to waffle on it. I was just trying to explain how we will use this, right? So here, for instance, this strategy that's running in here and that you see up here, this is the back test for that. And it tells us, or it's saying to us, that if we had run the strategy for the past 2 weeks, which we didn't, with the settings that we have on every single trade, we would have had just 20 trades. My landscaper's here. I don't know if you hear that noise. He's got some of the loudest power equipment. Gotta love him. It's gotta be 95 degrees out there. It is. It's hot as blazes here in Tampa. Hell of a nice guy. 20 trades, 65% winners. So a high winning percentage. And so it should be comfortable to look at. This is what it's telling us. And it'll also tell us run-ups, rundowns. Okay, thanks, Acer. You will hear him. You will hear him shortly when he gets that blower thing going. He's got noise canceling headphones, though, thank God, because I've been told him, like, you had to be deaf. I think it's super loud. He's got the loudest blower. And so when the person was asking me about percent profitable, I started to say is that, it can vary. This is like over the last 2 weeks, but, we could have a string, a higher percent profitable. And percent profitable isn't that important to us. It is from a psychological standpoint a little. I mean, you kind of like to have it, but it isn't that important from a performance. What is important is this thing, this profit factor right here at 2.73. And that would tell us that we're making, in simple terms, $2.73 for every dollar we expend, including commissions. So that's good. You get over 3. Now you can do a whole lot better, but it's a very honest, a very real number, because if you fall below 1, then you become a losing money making machine. Now, that winning position up here is up $1,700. Just to give you an idea of what you could do, right? You could have it on another screen, but let's come down and look at the average winning trade here. Let's see if we can, this thing here. All right, so oops, we'll come back to it. All right, so I can come here and I can say, okay, the average winning trade, Don, is $1,761.54. And I'm up 1,600, right? We could have done that even this morning. So that now this is where it gets into how you want to play. I can tell you how I'm going to play, and I'm going to let it run. I can definitely tell you how Susan's going to play. She's taking the trade off, or she's going to set a really tight stop under it because she's going to say, hey, wait a minute. This machine's telling me that there were 20 trades in the last 2 weeks, and the average winning trade is 1,700, and I'm up 1,600. There is no way in hell that I'm interested in trying to, let that thing become a loser, or and I'm be fine with that. And so if Susan had been in the saddle this morning, she also wouldn't have had that. We had run up 2,500. She probably wouldn't have seen that run up. She probably would have taken the 16 to 1,700, and she would take this 16 to 1,700. I mean, I just know that. I know how she trades. Brutal. She's brutal. And and she may have even taken it a little bit sooner, right? Women are, yeah, she just is. She's just more, she's, I don't, it's disciplined, little more risk averse. I'm going to let it run, right? And I will let him run. And so it's not like it's a good thing or a bad thing. It just is. It's Susan's trading personality. It's going to be my trading personality. You're going to have your own trading personality. What we got to try to do during a Q school is make you aware of your trading personality, make you aware of some things, and then try to make you aware of the various trading strategies and what they're trying to do, and make you aware of that so that you don't impart your trading personality and try to force something onto a strategy that it isn't meant to do. If that makes sense, because you can ruin it. If you want to trade really, really fast, I don't think it'd be a really good idea to take the strategy and try to get it trading really, really too fast. But any case, so that's the idea. Aces as yes, they absolutely do. Yes, that messes. Depends if that messes with the algo stats or not, but logging wins is a win. Yeah. Yeah. Yep. But I wouldn't measure your success on wins, because you can do really, really well losing 7 out of 10 times. You could have a person win 8 or 9 times out of 10, have another person lose 7 out of 10, and the person who loses 7 out of 10 absolutely kick your ass one side or the other, do much, much better. It sounds crazy, but it isn't. It is definitely so. So we're going to let you watch, and we're going to let this run, and we very well may see if we can ride it through the Fed minutes, right? It's still kind of slow. It's still summertime. Wall Streeters, they just think some of the laziest people, because they anytime there's a long weekend, they take the week off before, they take the week off afterwards. I mean, they seem like they're never, I don't think they do work. I don't know what they do, but they take off a lot of time. I like the profit factor in the consistent of 20 to 50 trades of that. Oh yeah. Yep. In fact, we were discussing this, Acer, with our members this morning. So this is a new beta strategy, and now most of our strategies, I would not suggest that they be run 24/7. I would suggest that they be run, during normal session hours. This one, though, I think is going to need to be run 24/7 because it only trades like 20 times. And this is what we were discussing. And if that trade comes in at 3 in the morning or at 8 at night or 9 at night, or, sometime, I mean, if you miss, 5 or 6 trades, I mean, you miss, 25, 30% of them. So this would be the idea. So this could be a really nice strategy. And we've always wanted to have something like that. And I like what this thing is doing. Now we're keeping notes, and we have other ideas on this strategy of what we want it to do. And it isn't always, profit factor, trailer, stop loss. We want to use the technical aspects of what the strategy is doing so that, that we can better manage it. So one of which was that $2,500 run up. That probably should have been grabbed, whether I was here or not here, and I wasn't here. I can't, it's a little shocking that it turned around that quickly. I wasn't gone that long, but so we're going to build in. We have something that we call proximity fuses, and they if certain things, certain conditions get within certain parameters, these proximity fuses will start to trigger and do certain things. So, and that's it's a beautiful thing. So, but we need to see it. And just like what we saw last week, we were running it like we had a significant draw. We haven't seen, in the time that we've been running here, and we've been doing this live with y'all for quite a bit. It's the same strategy called the Stinger. We haven't had, I mean, it's $175 draw. It's not too bad. And I'm not using, I have Swing Machine up here. I'm not using it, but if a person this morning was using it, was really like dialed into the Stinger, and we were up 2,500, and you look and say, geez, the average winning trade is like 2,500. And the NASDAQ is going along, what, maybe I ought to just, get on, take that money. That could have been a reason to get out. And if you took it long, so you're looking, we should be, up thousands really, so again, what we're doing right here, right now, I think you'll have a greater appreciation for this, right? I'm not trying to demonstrate an outcome. So I'm not trying to get in here and post a number. If I was, I could start posting numbers, and I'm not doing that. This is being beamed. Couple of things. This is on a live Zoom that our members have access to. So they can come in and look and see and reach us anytime, and then see what we're working on. And that's the case from Sunday night through Friday. Also, we're beaming this now to YouTube. You're on delay just to create some awareness, but we're also taping this through a software package that is a little bit, it chews up the computer quite a bit, and we'll tape it, and we'll save that tape, and then also compress it down to minutes, and give our members a glimpse of that, so to hopefully maximize their time, right? So, and we will even overnight, I'm not here for every minute of every day. I do sleep, I do eat, to get out. But we're taping just about all the time, so that I will even want to come back in and say, okay, what happened here, and I can recreate it. Yeah, I can see what I need to see. If you have any questions, feel free. Otherwise, we're just gonna, let everybody watch. And again, the market's going to be probably a little choppy, a little indecisive here. Then make a distinct move, and we'll be in position hopefully for that move at the Fed minutes at 2 o'clock. So we'll let you watch. You are on a bit of a delay, so I wouldn't be trying to trade this. Plus, you haven't been schooled in it. But so again, we're just doing it to create a little awareness, give you a chance to see what it looks like. And so as you can see too, this is why, fortunately we don't have to compete with each other, right? This isn't beat Bagger Don or beat Susan or beat the next guy. There's none of that. It's getting done what you need to get done. Maybe you would have done it differently. Maybe you would have taken that 1680 or the 1600 or the 1500. And if you did, you're out. You're out. And if you had done it earlier, yeah, you'd be up 3 grand. If you had taken the 817 loss, yeah, you're up 800 and you're out. And you would have to wait. You would have to wait for the next trade. And that next trade may be, oh, I don't know. It could be 2 o'clock in the morning. It could be, 9 p.m. or 9 a.m. tomorrow morning. I don't know when it's going to be. 20, in 2 weeks, this strategy's only given us 20 shots at this, right? So it takes, now that's that particular time. Maybe that suits you, maybe it doesn't, maybe, so it does take time, right? And you're not trying to necessarily beat the market. We're not trying to beat it. We're just trying to extract cash flow, and try to do it on an ongoing basis. That's all. So that's why, when it gets into, performance. So when folks ask performance, I'm happy to get into discussion about performances and what our expectations are on a particular strategy and what we're trying to do. But does the person who is asking that, do they understand how it is we use that information and how it is we trade? That's what I have to be very aware of, very, not necessarily cautious, but I want to make sure that folks understand, because many folks that come through that aren't traders, they want what they want. They want a signaling service. They want, something that they don't have to think about, something they don't have to learn. They just want something that's going to take the plane up and fly it around and put it down, that sort of thing, right? And that isn't us. That is not us. And I'm not even sure any of that exists, actually, quite frankly. There, hopefully that makes sense. But we're gonna stay with it. It's only 12:30, and again, for everyone that knows or doesn't know, we have Fed minutes rolling out at 2, and so it's probably gonna get a little crazy. It'll get a little choppy leading up to it, and then probably get a little crazy. We'll let the strategy, for better or for worse, play itself out. Now, I'm confident when I'm running a robot and a beta robot at that, I'm pretty confident about them, because I also know, when we drew out those little boxes last week about discretionary trading and mechanical trading, that I have the skill set. If a particular strategy stumbles and doesn't do so well, I have the skill set to, number one, turn it off. And then number two, go into the market, maybe not in the next 5 or 10 minutes, maybe not even the next few hours, but it's certainly the next day or two, and get back my bread, get back my money, and get back underway. I've always examined and thought about why it is that people hold on to losing trades. And a lot of times people will say the thought is that people hold on to losing trades because they don't want to be wrong. There could be some of that, but I also think that there's a part of holding on to losing trades because a person doesn't really know what it is they're doing. They don't know why they get into the trade. And if they take the trade off, yes, they have to suffer a loss. And then worse than that, they don't know what they're going to do next. So they just like, nah, I just won't do anything. And invariably it doesn't go well. So that, we have to work through a lot of that, and we set it up, during the Q school, to hopefully get you through that process. Now, if we're going to get a sustained sell-off here, leading up to the minutes, I want to see the VIX start to do it. I want to see it start to rip. I want to see it go long. And then we can get maybe a sustained sell-off. Now the program still has this, right? Right. Now, if it's Susie, she's got her $1,600 in her pocket and she's not had another trade and she's done, right? And she did it, we're talking as an example. She didn't actually have this, but but if she did it this morning, then she's got a $3,200 and then she's done. She just waits and be done, but I'm staying with it. I'm staying with it. Maybe you would have taken your money. And I'm pointing that out because at 3 o'clock or at 3:15 or at 3:30, this may come back and be a small loser and we finish down for the day. Or this thing could be up 3, 4, 5 grand. It could be. Because I also know what the positive outliers are capable of. It could be. So I still have, decisions to make, So even though, you're the pilot of the plane, and even though the plane is on autopilot, you still have some decisions to make. Do I turn it on? Do I turn it off? Do I go back to the airport? Maybe you don't want to be. Susan doesn't like to be anywhere near the Federal Reserve. On Fed days, she's not playing. She's not trading right here, right now, so she wouldn't, but she probably wouldn't even want to be around it. And she doesn't like to trade on options expiration day either, because the reason is that the pricing can be extremely chaotic. And there's a lot of retail people that's the only time they want to trade. I want to get in on Fed day and bet on it. So it's kind of like, why bother? We don't have to. We'd prefer to be trading in the market that is really boring to them. And that's good. We always joke, boring is good. And it does not take long, right? It doesn't take years and years. Was that my phone? Yeah, I'm sorry. I thought that was there are 24 possible trading days in a month with futures. Take Fridays off, which we like to do. We're down to 20. Doesn't take, you put together 15 to 20 trading sessions. You may not win on every single day, but you put a few of these together. The biggest concern I'm going to have is making sure that you stay grounded. Now I'm not going to be there to watch every single trade, and I can't, and that isn't what you want anyways. But I just remind everybody, stay grounded. Stay grounded. You don't get cocksure and get over your skis and start adding leverage. And I did that with 1,400. So if I add 3 more of those, I get to get 5 or 6 grand, and um, guard against that. And don't equate the money. So like what you may be focused on that. We keep radar up because we can see everything that we need to see. We can see it here. We're focused on this. I'm aware of this, and just let it play out. I can only describe this. You have maybe previously a job or a career or something you were doing is hopefully something you enjoy, something you like to do. You're hopefully handsomely rewarded for it. And you probably don't think about the money that you're being paid every single moment, right? You just do it because you enjoy it and you're rewarded for it. Hopefully that's the case. Trading really needs to be the same way, but the problem is the challenge is that it's right in our kisser, the money's right in our face. And so you really have to kind of really disengage and separate yourself from it and don't start like, okay, hey, I made $1,400. So, hey, we could go to Ruth Chris Steakhouse tonight and, you know, and splurge or that sort of thing. Don't start rewarding yourself with treats, with some of the money. Um, don't don't do that. Easy for me to say, but just try not to do that. Because if you do that on the positive side, and then when you have a dry down, suddenly now you're not going to Ruth Chris Steakhouse, and then that brings in the emotion, and we don't want any emotion. We don't want it. And this was a conversation that I had to have with Susan because I love Susan dearly, and I love her for all her emotions and all her stuff. And it's we have a great relationship. But I had to have this conversation with her, and I even had to think about it. It's like, do I really want you to do this, Susie? Because when you do this, you're going to have no emotion. You're going to have to, come to grips with it, right? Now I can still sense it, right? So I can't sit beside her. I mean, we've been together way too long. I can, but in many of these tools, if not all of these tools, were an attempt to help Susan overcome that, right? And that's how much of this came to be. Because we weren't doing stock market caddy. We had no anticipation. The stock market caddy wasn't even, we weren't thinking about that. We were thinking what we needed to do and how we were going to do it and how do we get away. And we tried all kinds of things. I had a conversation with a nice gentleman the other day. We trade all kinds of things, sitting beside each other. That didn't work out. Me putting on the trades, Susan taking them off, that didn't work out, for a whole host of reasons. And what does work out is just letting a person do what they're comfortable doing and understanding what is available to them. That makes sense to me. So I never tried to change Susan, never tried to, sit on her shoulders, do this, do that. That's just not going to work out. And I'm not going to do that to any member either. They're going to do what they're going to do. It's just that I think I can help because they'll wind up doing some things sometimes that I just know, statistically and mathematically aren't going to work out. We had one member, still do, and he did value winning percentage. God, I'm winning like 90% of the time on this. It's like, well, you know, um, you can have strategies like that, but if you run them too long, here he comes with that blower. You hear that thing in the background? Oh my God. I got headphones on. I can barely hear myself think. I don't know how he carries that around all day. Things like nuclear and nuclear blower. But so, and it's okay, but one of the other risk parameters there was talking about a person who values that high winning percentage is not to play very long. You can't play very long, very, very short periods, This one here, we can stick around. We can play, pretty comfortably, right? And maybe that, Ace is saying, hey, I like that idea of trading, 20, 50 times in 2 weeks. That works for me. Okay. Yeah, this would be, you know, where you might want to go. Works for me too. Hmm. Now you're going to see this information over here change because I'm going to take a peek at another workspace, and so don't become too concerned here. This other workspace is running another program that the trades are not going in a live environment, and I want to see what it, and it's much more active, and I want to see what it would have done today. So let's see. Huh. Well, that's pretty interesting. So that's also good for our members to see. This is another one. So this one is much more active, and it's telling us that it would have done. No, excuse me. No, that's not right. Huh. How come I don't have, has it not had any trades today? You know what? It may not have had any trades today. So it's not even that active. It isn't. No, no, it hasn't. That was on the 3rd. So it hasn't. Okay, never mind. But so we're tracking a lot of different things, and we're going to put this back to our friend. So this is the one that we are back running. So in any case, sorry about that. Hello. We've just been doing a few things here. The market pretty quiet, waiting on the Fed minutes. Varan Chaudhary, bro. Hey, bro. I want to learn how to create these things. I know CPP, but no one teaches designing such systems in CPP, please. I don't know CPP. I think you're probably referring to. Let me get. Oh, what the problem with my little. Um, Don't know if there's more to your message there. I got something that's in my way and I can't move it quite yet. Um, so I don't know, maybe something more there that I can't see. I'm sorry. Let me see if I can remove this or rearrange this chat function up to the top. I got my, one of my, oh, there it is. Cece, recommend me some resources from where I can learn. So, don't know what you mean by CPP. It might be a programming language. And now we have a lot of members that are programmers, and I think it's great, right? We learn from them, and it's back and forth. So, but you don't have to be a programmer. But if you are a programmer, I think that's great. And like I say, we have a lot of programmers, a lot. And I'm not a programmer by trade, but I have learned to program. Susan had more experience at it than me. The programming language that we use is primarily easy language, which is part of the TradeStation platform. The issue is there are a ton of traders. There are a ton of coders. There just aren't that many of both. And it just really helps. And so when we started this little gig, and I'm not talking about stock market caddy, but I'm talking about trading. Susan had more trading programming skill and background than I did. She had worked at IBM and had worked at Lotus, and so she had it. And but when I think back to it, um, I thought, okay, well, we're going to sign up, Susie, and they get this easy language, and I'm going to pay for the course, and you're going to go down there and learn the easy language and learn all this stuff. And I don't think so, Don. She didn't really want to do that. And so long story short, I ended up going. And I'm glad I went. I'm glad I went. So it was learned, but it took a long time. It's like learning another language. It takes time. And and then I came back and then taught Susan what I had learned, and then we kind of compared notes from there. But I think it was probably a good thing. I think it wasn't that Susan just didn't want to go. She just thought, what, it's a good idea that you go. And it was, and it is, because if you have some trading, some coding skill, and you can match it with your trading skill, then it's good. It's good. And we have plenty of members that that are mixing and matching and building from, and even now our codes are encrypted though. But the concept, a lot of the concepts we can get into detail, and some of them we can't. They're purely proprietary, and some of them are purely math. But so I'm not sure what CPP is. You can let me know if it's a specific, if it's Python or something. But if you have it in your head, not you specifically, Varun, not talking to anybody specifically, if you have it in your head, you have it in your mind that there is some specific holy grail Bible code to the market that is going to work on every single market, every single day, exactly the same, that isn't going to happen. It doesn't, or that you're going to corner the market. You're going to be, like the Hunt brothers trying to corner the silver market. I don't know if there's some books written about that. And they were out to corner the silver market. You're not going to, I don't believe, you're going to corner the market. The holy grail of trading comes from, I think, your expectations, your discipline, your patience, a willingness to accept some uncertainty in your life. And a lot of times that's hard for people. And it's maybe a little bit hard for me in the beginning. But if you learn to grow and embrace that uncertainty, not knowing, what's going to happen at 2 o'clock when the Fed minutes come out, we don't know what we're going to make. We don't know, what exactly what we got at risk. If you can learn to embrace that, it's really good. It's really good. Keeps life interesting. Does that make sense? I hope so. But we're self-taught. So, we have, and it's not like we've been doing this for 6 months or 6 years. We've been doing this a long time, right? And I was involved in the markets. I taught surgeons how to do surgery for 20, 25 some odd years, but I was always interested in the markets, was schooled in more traditional things that are still out there, still probably okay. But jettisoned that approach in the early 2000s, a lot of trial, a lot of error, a lot. And then Susan and I, really, put a lot at risk, a lot of capital, a lot of trading capital, a lot of trading, a lot of time, a lot. Sorry about that. This Camtasia's giving me some fits here. We had it all recorded, and I don't know if I'm getting it. It's quite a bit of hours. I should have stopped Camtasia earlier and broke it up into pieces. We got about 12 hours or more of video, and that really chews up our memory. But so we've been doing this a long time, and we can you do it? Sure. Are you going to build exactly a swing machine? No, this is just not going to happen. Nope. You going to build exactly the Nicholas? Nope. There's too many. Can you come up with something better? Maybe. Maybe. But we're confident that we can save you a tremendous amount of time. Effort. I can't promise anyone an outcome. I wish I could, but I can't. In any case, we're going to be here. And if you have any questions, let us know. We don't during the Q school, we don't teach programming though, right? It's because I'm kind of self-taught. I'm not by trade, and we can get into, and the issue with programming as well. It's we do everything ourselves, so we haven't run into anything that we can't do. Some takes more time than others, but programmers are they're very well paid. They're very good. We've never had to hire anyone, thank goodness. But the going rate is like, $200-300 an hour, and they get like a minimum of, half a day, 4 hours work. So it's pretty expensive endeavor. But it's like everything else, so that's where, we set out to do, to be able to do everything ourselves, including even though the website, right? And there are folks that build websites. I'm sure they could build it much better, maybe. but we try to do it ourselves, and it's fun. Now it is, interesting here. Swing Machine is actually trying to buy this market. The machine is actually short up here. We're not trading Swing Machine. We're not, but I'm looking specifically at the NQ, and 29 minutes ago long, 5 minutes. It's going to be really, really interesting. I'm thinking the market is going to sell off. That's where that's what I'm thinking. I'm not going to trade what I think though. That would create anxiety. That would, become painful. You start trading what you think, or worse than that, trading what someone else thinks. We're mechanical, we're robotic. Golfers, you look at their golf swings, you look at a person that can hit a golf ball, and it looks fluid. It looks beautiful, right? A beautiful golf swing. But those golf swings, maybe with the exception of um, oh, who's the golfer that died in the plane crash? Um, oh, what's my thought on him? Payne Stewart, he had such a fluid, natural swing, right? But I think a lot of the other golfers, they just learn really, really good mechanics when they're younger, and then just through hours and hours and hours of practice, these mechanical golf swings, just look beautiful, look fluid. Not to bring any of the real world into this, but I don't know if you're seeing it. I'm seeing it on the Twitter sphere. That the immigrants in France running amok, and they have set fire to one of the largest libraries, or the largest library in France, containing an archive of over 1 million historical significant documents, and they torched it, and they're burning the thing to the ground. This is not good. It just isn't good. That you know, but mm, terrible. Hey, let's just slow things down on Swing Machine. Let's just take a look at the VIX first for a 60-minute view. 60-minute view, VIX is at 40. Could go lower, meaning the market could go higher, but right in the middle here. So we could still see a pop. Let's look at the ES on a 60-minute ES. Where are we on the hour? We're right at the midline, right? So the market's fairly, on an hourly basis, fairly in proportion. This 44.80, 44.81. Could the market go higher? Yeah, it could on an hourly, but it's right dead in the middle, right? Dead in the middle. And we know that there's a catalyst. We know that there's a hand grenade right here in front of us, another 15 to 20 minutes. Are they going to pull the pin? If they do, we're going to see it. I mean, it's not going to get past this. Let's take a look at the NASDAQ 60-minute. So the NASDAQ, though, is at 70, right? So if I'm inclined to do any shorting, I think I'd rather go after the NASDAQ. And we get underneath, if we can get underneath 15,332 here in the next hour or two, we could be closing down at 15,000. We could pick up 200-300 points here. Could it go higher? It certainly could, but and it is showing strength to the rest of the markets. But so on an hourly basis, we're going to throw this back to a 5-minute and watch things play out on Swing Machine. And now we're not trading Swing Machine, and we're trading a specific program. And we're going to let that program run its course. But I'd like to see on a 5-minute, I'd like to see that VIX get. Oh, we lost our back test there. Let me put that back up. There it is. So we got another 15, 20 minutes to go. I wouldn't be too eager to pounce, one way or the other, because invariably we get these, headline events, and you'll see Swing Machine later today on one side of this or the other, and there will have been ample opportunity to have acted, so you don't have to be that fast. Hey, everybody. I guess we get the noises out. It's 2:01. The minutes are hitting the wire. Let's just take a look at Swing Machine. The 5 minute VIX. 5 minute VIX is ripping up against the short. So that's the one that we really want to pay attention to. We want to see that VIX get long, and that could confirm a sell-off on swing. Right now, though, it's all long. Still early. NASDAQ is still all long. Looks pretty thin to me though right now. We're not recommending anybody take any of these trades. It's not what we do, right? That isn't what a membership to Stock Market Caddy is. We're not in here every day just handing out fish and handing out trades. It's not what we're doing. Um, we are handing out the tools though. And this tool down here is a robotic trader, and you can see it's just doing its thing. It hasn't had but 3 trades all week, and we're in the hole 817. Easily could have, should have, captured about a $2,500 profit this morning. We opted not to, and but we'll see where we are at the end of the day here. If you have any questions on YouTube as to who we are, what we're about, I'm more than happy to try to answer those questions. Again, it's a lot different than I think everything else that you're going to see out there. What we're hopefully doing is teaching and mentoring folks how to play their game on an ongoing basis, right? And especially if you like to trade intraday and you have the time, you have the capital, and you want to be trading either full-time now or full-time later. And it doesn't mean that you have to be in the market or at your computer desk, every minute of every day. I'm not. Our computers are on though, they're doing their thing. But if you have any questions, anything around trading, we can help. I don't mind being challenged. That's totally fine. Again, we're not trying to prove an outcome here. We do our thing. We've done pretty well as if someone's trying to get a feel for what we're doing. We have competed in the last 3 CME challenges by this Chicago Mercantile in a week-long competition, 3 of them, a week each time, trading the same products, the same leverage, the same tools. Actually, we couldn't trade it robotically because I had to put the trades through the CME site. So we traded it what I would call mechanical, using Swing Machine and a couple of other tools. The first contest, and this has all been documented, and it's on our website on testimonials. You can go there and see. There were 1,400 registrants on the last day. Now, we were trying to win it, which is not ordinarily what we're trying to do when trading, but we were trying to get a little bit of prize money to be in the top 3, and we did want to have bragging rights. But we were number 10 on Thursday, and we ended up finishing 20 out of 1,400. The second time, there were 1,600. And on the last day at 5 in the morning, we were number 2. And we ended up finishing number 7. The last time was our worst finish. There were 2,200. It was on precious metals. And 24 hours out, Thursday, at about 1 o'clock, we were ranked 35. And unfortunately, we didn't get it done. We came in at 107, I think 107. So that was our worst finish in the top 5%. And now we didn't stay up overnight and do that. I was prepared if I was in the top 10, as we did on the second one. If we were in the top 10 positions, top 10 to 20, I was prepared to stay up overnight for the last day and to try to win the thing. But that wasn't the case. We were like number 50 or so, and I didn't stay up on this last one overnight because I didn't think I can make up that kind of ground. And so we came in where we came in. But it doesn't matter. Yeah, 20. Yeah, thank you. Yep, we're in the top five. Uh, um, it doesn't matter, what I do, what someone else does. Doesn't even it does. The back tests do matter, but I wouldn't be out shopping trying to find a strategy out there that somebody is presenting because it may you may be looking at something that is totally skewed. You may be looking at something that is accurate, but is the market is going to flex. And if that strategy doesn't have any capacity to flex and or make any adjustments and or you don't know how to make those adjustments, then it's not going to help you. No. Thanks, Tina. Good to see you. Pretty boring trading like this, right? Pretty boring. But again, we just remind everybody if folks are passing through, if your goal is to trade quickly, if you're one of those folks, and I am sometimes, that talks real fast, walks real fast, plays golf real fast. They talk about a tempo. If you want a trading strategy to mimic that, we have them. In fact, we got a ton of them, and so a lot of times it's a little more difficult to slow everything down. This guy is really, really slow. He just gets into a trade and he's just doing his thing. He's been in this trade here. Well, we had you guys have been in a live environment on YouTube watching some of this. We had that trade that I think that went on like Sunday night, and that thing was on for right through 4th of July. Had a run up this morning of $2,500, 2,500, and I wasn't trying to prove an outcome, so I'm not sure I would have done it anyways. But I was trying to go in. I wanted to go in and look at the average run up, and I was late getting in to do it. And the average run up on this strategy is $2,500, $2,540. I think. Well, let's show you. Let's see the average. Let's see if I can scroll this down here. It's a little slow here. There it is. So the average winning trade, it's right here. On the long side, it was 24.20, and we were up 2,500. So what I was about to try to share with everybody, when you have that kind of, this is we talk about, knowing what the back test is and interacting with the back test and helping it to help you manage yourself. You could decide what you might want to do. Now, when it's all said and done, well, on the short side, it's only 1,300. And when you balance the two, it's 1,761. Now we are up. It's kind of, we've been up, 17, 15. We're up 15, 1,600. So you would have a decision, maybe. I didn't do that. That interesting? I did not do that. Kind of wish I didn't do it, but I did not put that trade in. The machine did. So it's kind of interesting though, right? It hit right on, happened to, right? The average payout. So, but you can intervene. So cleared up the loss, right? Cleared up the loss, and we're up 670 now. And now, so you could have had a decision to disengage the strategy. You could have, you have a decision to make right now. You could still disengage the strategy, and just break even here and walk away with your 670 for the day. There are 20 trading days. $670 in a day is a very fine day. It puts you on pace to do, 12 grand a month. But we're going to let it run. We're going to let it run. Now, the strategy is not trading swing machine, right? So it feels a little awkward to me because I'm watching swing machine, and I'd like to be in there trading swing machine and doing my thing. And I probably would have wanted to stay short here, but we're gonna, we're not doing that. We're letting this, trading robot run its thing. And so I'm going to let it do it. That makes sense. But had we, taken the 2,500 this morning, we could have had a, very, very impressive number here. But we're not doing it to impress anybody, or we're not trying to, prove an outcome again. But let's see what this thing does. Now, it does have does not have a stop loss, but it does have a technical exit or two to prevent us from having something really bad happen. At least that's what our models show. So I'll be watching this with a keen eye. And market looks kind of heavy to me, through swing machine. So I'm not sure that this thing's going to survive. I don't want to get in there though and second guess it right here, right now. But maybe down the road, maybe you will. if you were running that, you might say, hey, you know what, swing machine's doing that. I'm going to go in and take that little loss and see if the machine can get me short again, or, I'll just wait. Now there are only 20 trades in 2 weeks. So, we could be out of this and be waiting hours, for the next short, or, it's not going to be every 5 minutes. But we do have programs that can trade certainly that fast and faster, if that's what your style of trading and desires, want to do. So the strategy is very much, the stinger is very much against swing machine. It'll be interesting how it plays out. It's a little, like I say, it's a little uncomfortable to my eye. The little plus sign in front of the NQ means that the strategy is long. That's what that plus means. It's had a drawdown of 200. It's had a run up of 135. Swing machine looks to me like she's going to sell off here, So I also want to see, if it does go south, I want to see if that trading robot is going to respect the technical exit that we have. I want to see just if it's a loss, just how much of a loss it is, and how does that compare to the model. So we're vetting this thing, and it takes time. It takes days. It takes could be weeks. But we're gonna see. Now, everything that you see on Swing Machine is programmable. We can trade it any, if you want to trade it 2-minute and 7-minute, you want to trade it at a tick count, you can do that. We can trade multiple time frames with each other, against each other. We're building in the capacity to add a market. Okay, so that robot's having a draw, and we'll see if she takes herself out. Could I intervene? I could, I could. I said, hey, I don't want to take this heat, but I'm not going to. If you look here now, we know that there were the news of the Fed minutes. You look at the 1-minute interval, it was 9 minutes ago, 216. 9 minutes ago, 216. 9 minutes ago, 216. 9 minutes ago, 216. 150, 400, 60, 70. And there's really no reason to come out of those trades here on Swing Machine. It's headed, putting on the ES, putting pressure on the 5 now. The NQ looks like it wants to go. What we need to see is on the 5-minute, we need to see the VIX get long. the strategy is going to suffer here if it does sell off because it's on the wrong side of swing machine. But it does have a technical exit, and we're going to see just how much heat it puts on us. And so we'll see how we do. Now, when I look at the chart, which we can't bring that into view, but when I look at the chart and I look at the strategy that's on the chart, it does look like that it could get profitable here. Actually, it does. It's kind of good to my eye here. So, but that's why I'm not going to trade my eye, or I'm not going to trade my inner ear. Pilots talk about that all the time. They get skilled in doing something a certain way. They have to kind of turn off their inner ear. If they listen to the inner ear, they might have a tendency to pull hard on the yoke or the steering column and put the plane in the ground. Not a good idea. And now I just described this. We had a draw of 475. Swing machine is short. The strategy is long. It makes me it just feels a little awkward to me, a little uncomfortable. I'm going to let it continue to run. But when you find yourself in that situation, which, could happen, you don't have to necessarily stay put. We could go in and just say, you know what, let's just flatten out. Let's just flatten out. It's 2:30 and let's just finish the day and be up, 6 or 700 and call it a day. Um, I can give you the trading stats right now. Let's go look at, I'm going to look at the trading stats on this strategy since Sunday night. Let me do that. Let's see if I can open these up here. Yeah, I try. God bless you, Susan. Big sneeze. Oh my goodness. Big sneeze. We're generating a report, hopefully. Okay, so here it is. All right, so I can tell you, it's right on the numbers. So since the open of the market on Sunday, the strategy that we've been running that has placed this, what is the profit factor? 1.82. That's the profit factor. It has had, boy, I think it's had more than that, no? It's telling me it's had 2 trades. I think it's had more than that. That doesn't seem quite right. Winning percentage, 50. Could be. It actually could be. I thought we had a 1 or 2 more, but maybe not. Yeah, it should be right. Oh, I guess maybe this would be the 3rd trade. So that this would be the 3rd trade. Yeah, so it hasn't traded much at all, right? So we begin to, now it's just beginning. It's just beginning to collect this data. And so we begin to compare, that data to this data. And is it like, okay, well, I should be at 2.73, but I'm at 1.8, but it's still early in the week. Where are we at the end of the day? Where are we on Thursday and Friday? And where are we next week? Maybe I get to 3, maybe I get to 4, maybe I begin to learn other things, that I could help it. And suddenly I'm not trading what I see, what I think necessarily. I'm trading, I'm machine trading and letting a robot carry much of the load. It's a whole different place to be. And then when you get to that place, it really doesn't matter where the S&P goes, right? So you see all those YouTube videos. The guy comes out and says, yeah, we're going to go up 70% in the next 6 months, and we're going to go to 6,000 on the S&P. And then we're going to turn around and then once we do that, then we're going to crash 80%, and we're going to do that in a year and a half. That's bullshit. That's total bullshit. It's just, that's Dionne Warwick, call the astrology line. I mean, that's nonsense. It does, and the way that we trade, it doesn't matter. If it does go to 6,000, we're going to play. If it turns around and goes the other way, we're going to play. As long as they keep the damn market open. And in this world, I'm not so sure about that. But I jest. I think there'll always be market. It's embedded in American culture. I wish it was more free. I think it was more free, years ago, decades ago, but it's still more free than most things. And hopefully it's something you enjoy. I know Tina enjoys her trading because she's here every day. I mean, and she's has to be. I mean, she has to enjoy what she's doing because she's here all the time, and on YouTube. And so it does need to be something you hopefully enjoy, and it can be rewarding. You don't want it to be a source of frustration, a source of anger. That wouldn't be good. Just like golf, we talk about it, the person who goes out, and I don't have any that I play with. I wouldn't, but every once in a while, if I go to the golf course and I get paired up with somebody, or if it's just a twosome of us and I get paired up with a couple of other folks, we every once in a while, not all the time and not too often, but we'll run into that person. And it's usually a person who doesn't play a lot of golf, doesn't practice a whole lot. has very high, very unreal expectations of his own golf game. And the next thing you know, he's throwing clubs all over the place, and it just makes for, an ugly day for him, and an ugly day for everyone around him. Um, if you're having, we're human. If you're having a bad day, don't trade. It doesn't make it better. And I wouldn't play golf either. You know, I wouldn't. I like to have a clear head when I play golf, and I like to have a clear head when I'm trading. Now, when we look at swing, I do see this 5 minute VIX, wanting to go long. It does, but the market is just not really. It's still undecided here. So we're not going to give it too much, although but I just invite you to put yourself into the trade. Live vicariously through us for a moment or for a few minutes. What would you do? What would you do here? It's 235. You're up $670. This trade's up 20 or 30. We just got through the Fed minutes. The market's still mixed. Do you want to just keep running? Now, this particular strategy, though, remember what we said earlier, it really does need to run a lot. And if I choose to turn it off, what if it later tonight, makes a move and, um, you know, so I'm going to let it run because that's what we have designed this strategy to do. I run the risk of those of you on YouTube, seeing it, chew up that and become a loss. So that's why I say in advance, I'm not trying to impress anybody on YouTube with an outcome. We're really just kind of talking through what goes through our thought process a little bit when we're running these strategies. We have something very, very specific that we do for each person as they come through the Q school. We call it trade proofing. And it's a little page out of the Navy SEALs, they call drown proofing. And we take you through that. And to get control, or to help you get control of your emotions. We're going to let it run. When I look at the chart, yeah, it looks it looks pretty good to me now, and I thought so it didn't here on Swing Machine. Swing Machine wasn't so good, but the strategy looked pretty damn good. And so this thing is off and running. So she cleaned up that little bit of a loss. And now stay with me a little. What if you were trading like Susan and this morning the thing, was up, $1,700, $1,800, the average payout, and you said, I'm going to take that 1,800. You could have. Even if you didn't turn around and go long on it, you could have, but and you just took it back the other way, you had another chance to make, 17, 1,800. And here's another one here. Yeah, you did have a dry down of 475, but you're up 255, and you say, hey, I'm going to take that money and take it off. That's $3,000 to $4,000 a day on just a few trades. That works. And I haven't opened up, a single chart. I mean, I can see the chart. It's kind of like looking out the window of a plane, but I'm not in here doing anything. I haven't put on a single trade. I didn't manually put one on or take one off. So why even bother look at a chart? Have I seen any giant African land snails? I have not. I was asking Susan that too. They're showing up in parts of Florida. They're enormous, aren't they? I swear that that maybe I have seen them and I wasn't paying attention to them, but I hope not. But yeah, it's an invasive species that they're locking down various communities in Florida trying to get rid of these things called giant African land snails. So, but I don't, probably not. I haven't seen them around the house. I did see a black snake, but they're garden snakes. We did see that today. I was taking Ted out. Big black garden snake, but they're good. They eat the bugs. They're big fat things, and they're good for the garden. And we do see a lot of chameleons, right? Little lizards, little chameleons, and they don't bother us either. I like to have them because they also eat the bugs. I'd rather not have them in the house, but maybe in the garage or something. I don't mind a chameleon or two. They'll eat any bugs. Gracie loves to. Gracie is an inside cat, a calico money cat, great little cat, and she likes to get out on the lanai, and she likes to chase the things around. And she bites their tails off, kind of gross. And I swear, I think there's actually I think she's created a new breed. They got like these real short tails. I think it's on account of Gracie. The only problem is, I don't know if they give off something because she gets sick. I don't know if she's eating the tails. It's kind of gross. Yeah, yeah. Right now, it's so blazing hot. Heat doesn't usually bother us, but right now it's like 90, it's hitting 96. Yesterday was 97. Humidity was in the 90s. The heat index was 109. Crazy hot. Even for us, it can stay this way too. I get a little concerned with that heating up the water, the oceans, but we had a beautiful winter. We had a beautiful spring. It was kind of cool. And then we got, into this summer pattern, and it can stay hot like this. Hopefully not this hot, but it can stay like this through, honestly, right through September, you know, into early October. I hope not. So look, I mean, this trade turned out pretty good, right? Ah, I felt uncomfortable with it. I got to tell you, I did. I said it. I was like, I don't know. It was against Swing Machine. Now, Swing Machine here, is very depending upon how you want to trade this. And, it won't get every single trade right, but it gets a lot of them right. Now, if you want to be in here trading, the minute chart, in essence, a minute chart, with Swing Machine, you certainly could be. This is 4 minutes, $50, 5 minutes is 265. I mean, you could be doing that if that's what you want to do. If I am, I had this conversation with a nice gentleman the other day I was talking to. If I'm in here trading mechanically, meaning I'm making a decision to put the trade on, I'm making the decision to take it out, I'm following something, I'm trying to mimic, and I'm focused on, either Swing Machine or something in particular. Um, if I'm doing that, I do not want to make more than 5 trades a day. I really don't. That's plenty. Now, are there some days that I might make 6 or 7? Um, yeah, maybe. There might be some days I just do 1 and 2. Okay, boom, done. I'm out. I'm gone. Um, the fewer the better. But am I putting on 10, 15, 20? No way. No way. I can't remember a day that I ever did that. Something would be very, very wrong. Now, if I have a robotic strategy, that is designed to run that fast, and I know from the back test this thing's going to trade 10, 20, 30 times in a day, then I really don't care. The machine is making the decisions, not me. And that's fine. As long as it's, can keep my account profitable, or the volatility in my account isn't too unbearable, right? So I have some thresholds in my account value that I don't want to see stressed, which is roughly about a point. Trading a mini NQ. Now, it might be different for other markets, but trading a mini NQ, if my account gets down, $1,000 or more, then I start get a little bit of indigestion, and maybe I got to do some things to get the account, back in order. But the strategy has been really, really comfortable, real comfortable. So we'll be getting this out. We may have some annual members that are listening, and some of them have this. This is a beta strategy. Some have them. We rushed it out to a few. We didn't even have a chance to make a video. We're going to make a video of this. And although I lost last night's video, I went to compress the video, and was too many hours. My computer didn't hold it. So that's too bad. But we will get it again tonight or tomorrow. And we'll start getting out this beta copy. But there are some little additions that we want to build in here. Still some things in here that we see that we think we can make this thing maybe a little bit more sensitive, maybe a little bit more active, so that if you wanted to trade this strategy a little more active, you could. Sound all right? All right. So that's kind of what we do, folks. What we're not doing is looking at, candles. There's a doji, there's an engulfing candle, and the moving average is doing this, and the MACD is doing that, and the ADX is doing this, and, the OBV is doing that, and the daily is doing this, and the hourly is doing that, and I think I'm going to do this, and I just heard something about this on CNBC. No. I think the S&P is going to be at 6,000 in 2 months. I think the S&P is going to be at 2,100. I mean, will we make some trades, further out? Yes, but we're not going to do futures. We're going to use options, and we have tools that I haven't shown here. We don't show them a lot because the option trades take days to play out, right? So that'd be pretty boring. I just show you the tool, show you the trades we put on, and you'd have to come back, a week or two later. And so it's a little bit difficult to showcase that on YouTube. But they do very well, on balance. And that everything's on balance, right? Options are a different animal, very different, very good. They're very good. You can make a ton of money trading options. You really can. You can lose quite a bit of money. They can put a hole in the side of your trading boat. They can, right? Need to understand initially, anyways. I can't tell you how many people tell me, Don, I've been trading options for 5 or 10 years. And then we ask, not our members, but we ask them, like, how are they priced? And they really don't know. There is a specific formula for pricing options. And we use that formula, we disclose that formula, it's public. And embedded in that formula is the criteria, plural, for how options are priced. And so so I think they're much more difficult than futures, because you've got to get the direction right, up or down. You've got to get, or maybe you want to play it sideways, but you still got to make a determination on direction. So you're going to say, I think this thing's headed up. I think this thing's headed down. I think this thing's going to stay in the middle. Then you've got to get the duration right. I think it's going to do one of those three things over the next couple of days, next couple of weeks, next couple of months. You better get it right. Because if it happens, if you get an option that's 2 weeks and it does it over 4 weeks, that's no good, right? So you got to get the duration right. And then you got to get something that a lot of folks begin to glaze over and don't appreciate, especially in the beginning, something called implied volatility. Implied volatility. And so what is the difference between historical volatility and implied volatility? Historical volatility is the price movement of something, namely the underlying, over the last week or two in the past. That would be historical volatility. Implied volatility is the expected price movement up and or down over the next couple of weeks in the future. And options provide a glimpse into the future on that. That's because they're options. They're into the future. So you can get the other criteria right. And if you get the implied volatility wrong, especially if you're buying the option, you might overpay. So you might say, I think Apple's going to beat earnings, and they got earnings the next 2 weeks. So I'm going to get an option over the next 3 weeks. And I think they're going to beat, and I think it's going to go up, and I think it's going to be over the next 3 weeks. And you nail it. Apple beats earnings. Inside of the 3 weeks, Apple goes up the amount that you think is going up, but you don't make any money because the moment the news comes out, the embedded implied volatility gets sucked out of the option because now everybody knows that Apple beat. But you paid for the option when the implied volatility was high, when nobody knew, and therefore you overpaid for the option and you come up snake eyes. Yeah. So I almost never buy options in front of earnings. But yet people who play options, or the neophytes, that's all they want to do. They want to hit the big run. And the other issue with options is you can't really, some you can, but we can't trade them real actively, for us anyways. I'm sure others do, because the liquidity of the options isn't that good, meaning the difference between the bid and the ask is too wide. The difference between the bid and the ask on this NASDAQ futures is like one tick. But, and I suppose the options on the QQQs are pretty tight, but the options on Tesla are not going to be that tight. They're going to be tighter, but maybe Chipotle Mexican Grill, for instance, CMG, the width of the options are going to be really wide. And if that's the case, then they're very expensive to trade, very expensive, like hundreds of dollars, per option. And so you can't trade them actively. Makes sense? So we want to be versatile in what it is we're doing and what it is we're trading and how we're approaching it. So you could be doing everything really right and maybe just not trading the right products. And or if you don't have much time, and you have a big pile of money in an IRA account, you can still trade options in there. And one of the great approaches is to sell covered calls. Be a seller of options and sell covered calls. But we have radars that we have built that will tell us, based on that criteria of options, and tell us, is that underlying stock or index, is it in the position that we need it to be in over the next, usually we set it at about 30 to 45 days. And it will calculate everything that I just described, because it's known, it's in the market, and tell us if we should be on the bullish side or the bearish side, and tell us what type of option we should structure. Now, we're free to do something else. You'd be free to do something else, but it tells us. It's very, very good. I mean, why not, right? If those are all known quantities, why not just write the code to do it? And that's what we've done. We don't want to be guessing. Now we already know because we've looked over here, right? So this strategy is long here. And it got long in a place that it's like, I don't know. Didn't look that great, right? It didn't. But I'm not, the machine did it. So what do we know about the long side? We know that the average winning trade is 2,500 bucks, 2,500. So I really don't want to intervene, but I got to tell you something. We start getting, and then the average winning trade is about 17, 1800. So if we get up on this 17, 1800, and it's 3 o'clock, I very well might come in. And if I do it, I'll let you know. I'll come in and disengage the strategy. I'll capture the profit, and then I'll re-engage the strategy, the robot, and let it run all night. And we'll try to show everybody, at least a piece of that on YouTube. Again, we do these things on YouTube, not trying to, so please don't send me an email. A bagger. How much? I want that, SMC Stinger strategy. How much is that bot? I want to buy it. They're not for sale. You get them all. You get them all. As an annual member, you get them all. You decide what you want to run, when you want to run it, on what markets you want to run. And then you get to see what you like and what you don't like. Running too fast, you make the adjustments. Running too slow, and that's really what we're talking about most of the time. We're looking at the speed of the trades. We're looking at the volatility in our account, and we have to be flexible enough and have the wherewithal to make those adjustments. And you have to be able to do that. We want to spend 3 weeks with you before you get anything to make sure you got a good understanding of how we approach it anyways. You have a good opportunity to ask us questions in a live environment, and you have a good opportunity to vet your own outcome before you make the larger commitment. And then you're off and running. And I hope that makes sense. I'm not going to bend your ear all day here. It's 3. We're going to let it run. It's doing okay. And let's see if I do intervene, I'll come back and let you know. If you got any questions, let us know. But this is going to be a really nice, program, I think, especially for newer people. And I was saying this to our members. I think they're going to really like this because I think you can just let it run. Some of these others, that again run real fast. You gotta keep them on a relatively tight leash. This one here is pretty good thus far. Always qualified thus far. Now I had to make some decisions on. It's running on a Rinko chart too, by the way. What size Rinko, right? And it's really small. So it's a fairly fast, slow strategy, fast chart. And we're up, been here all day. We did have a draw. We missed that earlier one at 2,500. We had a draw of 800. We cleaned that up. We're at 670. If we stopped it right now, yeah, we're good. $1,000. You get $1,000 a day. There are 20 days. Even if you get 15, you lose 15 days, not 15. You win on 15 days, lose on 5. It still makes for a very nice month, right? So, nice month. Maybe you do better than that, If you had taken the 2,500 this morning and I think comfortably this could have been 4,000 or 5,000 today. And in fact, our members are listening and watching, and they're probably like, I'm taking that money. I'm taking it. And you do that a couple of times in a week, and you do that for a few weeks, then you never look back. And I may not hear from you that much after that, but just send us a note and say hello. Let us know you're doing all right. We think of everybody, all the annual members, we do, but we don't, they got everything, so they're not, they don't all come into the Q, into the Q school, but they do, but they don't all come into the Zoom, every single day or anything, because they're doing their own thing, but they do know where to reach us. We did have a couple of we had a number of phone calls and questions about Q School. We would like to speak with everybody that's if you're thinking about doing the Q School, we'd like to, have a phone conversation, brief. I'm going to respect everyone's privacy, just to make sure that it's the right step for you and you understand what it is, and we schedule it right. We don't want to have more than 2 to 3 people in a Q School at one time. We have a dedicated Zoom feed for that, and we schedule it, we schedule them weeks and months out around someone's schedule. So if you know when you want to do it, we have the 3 weeks plus. It's usually 3.5, where we're with you virtually every day, not all day, but we expect to touch bases with you. We'd like to every day for about an hour, but we'll work, and we will work around your schedule. If you can't do it and you say, hey, Don, I can't do it tomorrow, that's fine. I'm not a nut. Okay, I'm going to work with you. And if we got to catch up, an hour at night or an hour on the weekend or a couple of hours, we've had that, I'll do that. We would just, but you will need a block of time. We can't, we can go 3.5, 4 weeks, but, we can't let 3 weeks turn into 6 months. And, but we want to make sure that you have ample opportunity to see as much as we can show you, and you have a chance to see what you can do, and in a live environment. And ask a lot of questions, everything from stocks and options and futures and, a whole bunch, tons of stuff. We have an on-demand portion of that. We have dedicated Q School videos that are about 25 hours of on-demand. We have had folks ask us to sign up for the Q School, get access for the on-demand videos for a week or two in advance of the 3 weeks, so that they feel they can be better prepared to ask questions, and to, we'll go over it, much of it again, but we'll do it, one by, we can do that too. So you stretch, that would be stretching it from, 3 weeks to 5 weeks, something like that. We're open, we're amenable to doing that, right? If that suits you. At the end of that Q School, you're going to have learned a lot. We think you'll be in the top 5% of all traders. We've been in the top 5% of all these CME challenges. We're in the top 1 or 2% on 2 of them, the top 5. I think you'll be in the top 5%. You finish the Q School, I think you have the capacity to be in the top 5% of all traders. I really, really do. I see and hear the shit that's out there, including all the crap that's on CNBC. Getting to the top 1 or 2%, that'll be up to you. That'll be up to you. And you'll have some really great tools. And have we had members that have done better than me? Absolutely have. Crazy better. Yep. Blown me away. I was telling, on the video the other day, we refer to him all the time, Logan, both our one of our best examples, and also at the same time, worst example, because I listened, but I didn't act. And, but Logan came in, he, exceptional young man, really exceptional, in his 30s, Utah, family person. This was years ago now, maybe 2015, 2016, calls me up on a Sunday afternoon. We didn't have everything that we had. And he said, "Hey, Don, I've been shadowing you and watching you, and I've never traded a thing, and I want to know what you know." I'm like, "Oh, shit." Mike, I didn't quite expect that. Like, never traded anything. And he was, so I'm like, well, and we didn't have Q school at that point, right? We actually, a lot of the things, and this, every time we have someone that comes through Q school, every time we have a member that comes in, we always learn things, especially the annual members. And it just makes us better. It can be the smallest of things. Turns out with Logan, there was a lot of the biggest of things. There really was some things like the whole use of Zoom came from Logan. And I was trying to do something and I forget. I was talking to somebody the other day. I'm like, I don't know how we were doing it, but I'm like, Logan, I'd really like to be able to shoot the screen to you. There wasn't the technology to do that. And at least I wasn't aware of it. And this goes back like 2015, 2016. And he's like, "Oh, you got to get Zoom." I'm like, "What the hell is Zoom?" "Oh, you can shoot your screen." Really? So we had been using Zoom, and Zoom was trading at about like $30 a share. I'm like, "Oh, this is really good." We had members that bought shares of Zoom. So that was before, the COVID deal. I almost hated to see everyone using Zoom because their service kind of went downhill, but we were really spoiled. But that came from Logan. A lot of different things did. And um, but long story short, he takes a small amount of money. I think it was like 5 or 6 grand. He trades it for a few months. He adopted point and figure. He adopted the robotic nature of it. But he really adopted what we do with point and figure, which is a blast. It is a blast. And I was kind of glad that he did. And he was diligent with it, and he turned his, in round numbers, I don't know the exact, but I think around 20 grand. Calls me up one day, said, "Hey, Don, I'm thinking of trading this Ethereum." I didn't say anything. I kind of cringed. I'm like, "Oh shit," because I knew what it was. But that isn't what he asked me. Thank God. He just said, "Could I trade Ethereum using point and figure?" And I'm like, yeah, you can do that. You can do anything. You could trade, seashells with point and figure, anything. But I said, "What are you thinking of doing?" He goes, "Well, I'm thinking of taking the money and getting involved in Ethereum." And I'm like, okay. But he didn't ask, you know. And I said, "Okay, my only concern is just be careful with the exchanges because I'm not sure that I trust it." Okay. And then, but from what I understand, he bought about 1,000 coins at $20 a coin. And obviously it went to like 4,000. And he had them. He is done. He and his wife, they went out. Hopefully, I don't think I'm invading his privacy. He's written us notes about it. They bought a huge motorhome, took the kids out of school. They traveled the country for a couple of years. And one of the last times I talked to him, he said, "Don, do you remember when I was trading and I was so concerned over $200 or $300 a trade?" I said, "Yep, I do." And he goes, "Do you know, Don, over the last year or so, I've had trades that are up over 100,000 and I don't bat an eyelash, not an eyelash." I'm sure you do. And you might be thinking like, "Well, how could he ever do that?" I know he's like that because he learned how to trade, and it's very cut and dry. It's very cut and dry. Real person. Um, I do think it's kind of like a once in a lifetime though. I don't I don't know, maybe I don't want to say that nobody else could do something like that. I used to say to Logan, I say to everybody, do not sell yourself short. Do not think for a moment, and I'll just speak from history on this. America Online, the people that are consumed with crypto today, the people before that came before you were much more consumed with America Online, AOL, shares of AOL files. There was nobody more rabid than those guys. And you probably laugh and chuckle, but I lived and heard it. Like, and it's like, so, and no one thought like, oh man, when that thing blew up, after they bought Time Warner and it was pretty well known, it was, it blew up, like, well, will there ever be another America Online? Yes. Will there ever be another Google? Yes. Will there ever be another, Bitcoin? Yes. Yes. They're out there now. It just may not be crypto. It may not be an internet company. It might be a commodity company. It might be an AI company. It might be something else. And with these bubbles, you can make phenomenal, obscene amounts of money in a bubble. You absolutely can. And you can and you can lose it all if it is a bubble and you can't see it and you can't trade it and you can't see and understand the trading action, the price action. You can lose it all. I know Logan didn't because it had already covered all that ground. We spent hours and hours going over that. I showed, charts and what the bubbles look like when they come apart. So, in any case, I kind of ramble on, but you've got to think through each person. What is this to you? And what do you want to get out of it? For me, for Susan, we made the decision years ago to say, you know what, we will forego the bubble. If I had put all my assets into Google when it first went public at 99 and we were sitting at the computer, I could have done it. I could have done it. I actually said to Susie, we could do it. We could take half the assets, put it all in. If I had done it, millions, many, many millions. Yeah. On the other side of the coin, done it in the past, and many of them did come in. Well, thank you, Tina. JDSU, 3Com, other, companies, invested in private companies that had tremendous, private shares, tremendous potential, total snake eyes, totally, so, you've got to make, not, so I do think that when you're younger in your 20s, I think that I think people should take more calculated risk when they're younger, starting businesses. I just think so. As you get older, I think you got to be, because the time is not necessarily on your side. I'm not one of those. I mean, Warren Buffett didn't get started until he was like in his 50s, so there's plenty of time. But then again, you've got to be, mindful of it. Here, I've never been, and I didn't really expect to discuss this, but I've never really been one motivated purely by money. And I've never been afraid of money, never been afraid to make money, never been afraid to lose money. It's okay to have a little bit of fear. It's probably not okay to have a phobia. We discussed this the other day. I have had some people say to me, Don, I'm just afraid. I'm just like really, really afraid, to the point where they're actually describing what I would call a phobia. If you're afraid of heights, I get it. I am. I'm not crazy about heights. And So I'm not going to be a pilot. No, no way in hell. That wouldn't be a good idea. Not a good idea. Just not something I'm going to do. And, we used to be divers. And I made the mistake one day of looking at a building. I tell the story, and I looked, I didn't give it any thought. And we just did it. We were thoroughly enjoying it. And we had made a dive that was 100 feet. And on the way home after a long weekend, I looked at a building. I said, oh my God, that's 10 stories. That's how much water was above me. And I absolutely freaked myself out, and I couldn't dive again. Not even in 30 feet. I didn't like that idea. And that would be a phobia. And I'm not interested in breaking it. And I'm not interested in doing it. So I don't dive, and I don't fly planes, and I don't jump out of airplanes, but other people do and have a great time. And I'm sure they're very well skilled and all that. But money, I've just never been afraid of it. If that helps. Varun said, how can we create such automated systems? Well, you need to learn how to trade, So you've got to learn how to trade. There's no jumping the shark, Varnum. If you don't have any success at trading, discretionary, mechanical trading, then you're not going to be able to design any systems programming. You're just not. It'll be garbage in, it'll be garbage out. So you've got to learn how to trade. And we refer to it as no jumping the shark. You've got to be able to demonstrate to yourself, the capacity to trade, at least discretionary, good discretionary trading, and then mechanical trading. It's just like, when we looked at I was able to look at the program on the chart, and I said, I didn't like what Swing Machine was showing me, but I thought, that looks pretty good to my eye. And I'm not going to put it up here, but that's what we do, for 3 weeks, and I can show you, make sure that you're seeing what you need to be seeing. There's quite a bit, of time that, that I've got looking at this stuff. This trade here is 38 minutes old. It's up 200. 39 minutes is up 275. 37 minutes up 160. 40 minutes up 60. So it's been kind of turned out to be a quiet afternoon. I thought it would be a hard sell-off, and it didn't happen. But, I think we want to have a pretty good, afternoon here. So let's, we're trading the NQ. I think it would be probably best that we come in and we mechanically take this trade. So I'm going to disable the strategy. The strategy says, okay, you just disabled me. Do you want to take the trade? And I do. So I take the trade off. Now I'm going to turn the strategy back on, though. I'm going to turn it back on so that if it cycles out, now chances are we're not going to see any more trades, you and I here, but our members might see it, later tonight or tomorrow morning. And so the strategy is back on, but we're in the house with $1,284. I'm going to go to the trade manager analysis, which isn't the back test, but it's the trade manager analysis of what we've done since Sunday night. And I'm going to run a printout, take me a minute, and I'll be able to tell you what this strategy has actually did. So we're going to run this. And so this is the sort of thing that we spend quite a bit of time with on the Q School, so that you like, okay, I know how to run these. I get it. And compare and contrast. And it takes a minute or two for it to run. There it is. So, all right, this is what's crazy. What is our profit factor? All right, so we've made, since Sunday night, $1,282.80. The profit factor, let me see if I can break this apart for you. Let me see something here. I'm going to try to do this here. I'd like for you to see this. I have it on another screen. I don't know if I can draw it in or not. I'm going to try. Uh-oh. Maybe, maybe not. My computer's not liking this. Okay, maybe. When I leave the computer on for such an extended period of time and we do these videos, he gets a little angry. All right, so we're gonna bear with me here. I'm gonna see if I can draw this in to view. I'd like for you to see it. And oh shoot, it didn't come with me. I'm sorry. All right, we'll try it again. But I can tell you the profit factor anyways, which I found, I wanted you to see, it came in at 2.56. So let's see if I can print this out again for you. And so we could compare it a little bit, I hope. No, it's not going to let me move it. Well, yeah, maybe it is. Okay, it's not. Computer's a little sluggish here. Okay. Oops. Maybe not. I'm trying. I don't know why. Crap. Okay, here it is. Oh, it's not coming over. Okay, I thought I could drag it over and I can't. It's not letting me do it. So I'll have to relate it to you. But the profit factor came in at 2.57. So the model tells me we should be doing about 2.65. Am I upset with that? No, I'm all right with that. That's all right. It had a total number of trades of three. The winning percentage came in at 66%, right? The model is 63. Let's see what else might be important. The average winning trade, all right, so let's scroll down here. The average winning trade here in the, oops, on the back test is 1,742. The average winning trade was 1,050. The average losing trade is 1,150. Ours was 800, which is what you saw earlier. So that, so it's but it's only 3 days of running, right? And there's other things that we can glean and measure against. The average time in trade, well, we're in the trades a lot. Doesn't give us all the detail. I don't know why it doesn't tell us how many hours between trades. For some reason, it's not coming in. But the average time in the winners was about 2 hours and 25 minutes. The losing trade, we were in that trade for 2 days and 5 hours because of the holiday. But that's how long. Now, we had ample opportunity. And if we had nailed that, our profit factor would have been out of sight. If we had nailed the 2,500, I mean, we would have had a profit factor of, probably 15 to 20. It gives you an idea, a little bit of what we're about, just a little bit. There's still a lot more, but I can't be active the whole day. Yeah. So you've got to you got to work some things out. So as a person rolls into the Q school, I mean, this is also part of the Q school. Oh, okay. I'm sorry, I didn't see your other note. I know trading. I'm working as a software engineer. All right. We got a ton. I had profitable system. Just curious what technology we should use to make it. How can we automate complex system like trailing and momentum? Well, I'm a big fan of a TradeStation. So I don't think there's any comparison. You do not have to be using TradeStation to go through a Q school, but to be an annual member to take advantage of the tools that we have, you would have to have TradeStation because our programs will only work on TradeStation. So the program is still on, but we're in the house right here, right now, and so it's still on, and we'll come on now. We won't be on as much tomorrow, but we will give you an idea of how we're doing, and give you a chance to ask some questions. But we're in the house with that number. I was also about to say about the Q school. The Q school isn't just about trading. It isn't just about, futures. We do it individually. A lot of it's going to be about you. So, Varun, if I'm pronouncing his name correctly, he's describing to us his, the demands on his time and what he has and everything in it. And everyone has that. Some are more than others. Part of the Q school is for you to see what we're doing and then see how these tools can fit into your life, in which programs and what you can do. Now, I don't sell anybody short. All right. I don't want anyone to sell themselves short. Let me put it that way. But I think of one gentleman, his name is Adam. He's an annual member. He's been with us his second year. And he described to me when he first called on the phone, the demands on his time. And I just said, Adam, Jesus, I don't know, buddy. I mean, I don't know how you're going to do it. I'm like, I don't know how you're going to do it, because he was in a profession that was like tremendously labor intensive and tremendous time. And he said, like, well, I'll figure it out, Don. I'm like, well, I said, it's up to you. I said, but I am, he had a little bit of concern, and I had a lot of concern about the demands on his time. And I said, well, if you go through the Q school, at least you'll have a better idea. And he said, okay, I'm going to do that. And as you would imagine, he's got a great job. He's got a great career. He was an incredible self-starter, incredibly independent worker, incredibly so. And then he toward the end of the Q school just said, Don, I'm doing this, man. I can't stand it. And I'm like, how are you going to do this? And so I'm not going to describe to you what he does, but he does it robotically. I will describe it in Q school, but I'm not going to describe it here because it may not be the best. But we discussed it at length, and I had concerns. I certainly didn't recommend it, what he was going to do, but he didn't have any. He's like, I don't have any choice in it. And I'm like, okay, as long as you understand. So I just wanted to make sure that he understood the risk that he was undertaking, and he did his different steps, and he's never looked back. I mean, it's been incredible. He just wasn't, and he was also president. He just wasn't going to be denied. Incredibly gifted person and incredible self-starter and just like I'm gonna so I guess the point is though, you've got to find out how this is going to fit into your life, and I think the Q School helps you go through that process, for better or for worse, right? For better or for worse. I mean, maybe you go through the Q School, you learn a whole lot and say, oh, shit, this isn't for me. I don't have the time to do this. Maybe you will at a later date, or maybe it'll be something else. I think that you will certainly have the tool set too, by the way, and I was going to go here, to discern other people's bullshit. Okay, because I get emails and text messages from individuals hawking individual pieces of shit. And excuse the French, and I said to Susie, one of them, I said, I'm going to call this guy because I know what he's presenting, and he's presenting something that wouldn't last, 10 to 15 minutes in a live environment. And I called him, and I just pretended that I knew nothing. And he was running it on Rinko. And then I started to have a conversation. I said, is that custom Rinko? Does that mean Rinko? And then I started asking questions. And then at about 10 minutes into it, he just hung up the phone. So you get everything. You're not individual. And as an annual member, if you decide to go, as we work on new things, which is what this thinger is, this is new. Our members that, joined 2 months ago, 6 months ago, they're going to get a video, they're going to get instruction, they're going to get our expertise, our thoughts on this and what we've been doing, and hopes that they can take it and mimic it, and maybe they do something that we haven't yet done yet, right? So this is a relatively new strategy that we haven't run it on every other configuration yet. No way. And they might take it and do even more. So to that extent, it's kind of a collaborative effort. All right, it's 3:30. I didn't expect to be on here as long as we did. I'm going to let everyone watch the close. If you got any questions, I'm happy to. I'll leave it up until the close. I'm not going to ramble on. You're more than welcome to visit the website. You're more than welcome to send us any email. You're more than welcome to call. The biggest thing I want to just make sure that, we have an unlimited number of monthly members. I think the monthly is a great value because you do get some education with that, some educational videos. And if it's not good value for you after a month, you'll quit. Very rarely does anyone quit, and it's $100. The Q School is a much bigger step. So I would like to be able to make sure that we talk over the phone so that you feel good about it. I think it's important, and then I wouldn't even consider the annual. I wouldn't even concern yourself with it. You want to know what the criteria is, but give yourself the Q School, and then you'll be in a better position. We're going to set it up and you're going to do it. You're not going to be shadowing me. I'm not going to be, okay, do this trade, do that trade. No, you're going to do it. We will set up a view in the Q School, and you don't have to be on TradeStation. If you are, the better, but you'll be on your platform. We would ask you to trade in simulation. We would ask you so that you can focus on the learning. I have my doubts on some people. I think maybe they traded real. I don't know. But I would ask you to please stay in a simulated environment so you can focus on the learning. And then at the end of that Q School, then you'll know then is the annual something I really want to do. Then you know. All right. So hope that makes sense. We have tried to set it all up so that we slow the process down. It slows it way down, right? And we think that's better. Susan and I. And like I say, and at the risk of repeating, we've had folks say, well, you should just do this and you should do that. And you would have a lot more members if you did this. And you would, if you sold the individual programs. Yeah, we probably would. We'd probably have, stock market cap would probably be bigger and sell more and all that. But I think we would also, you know, if you don't know how to use it and don't know how to, can't make adjustments, I don't think it would be good or as good as it could be, right? So we want you to do well. I think that, Varun, I don't know what part of the world you're in. Futures markets are open virtually 24 hours. Um, and there are markets within the day, right? There are days within the day. It's kind of like when you go fly fishing, you got a really wide river. You don't try to fish the whole river. There are rivers within the river, right? So you just like pick a portion of the river and fish that. You don't try to fish the whole thing. You just play that portion. Um, Little League baseball, right? I can remember when a Little League baseball, I think I was playing like second base. I was like all over the place. I was running around in the outfield. I was running around. My dad just said, "Don, you're playing second base. Play second base. Don't be trying to play all over the place. Because if you do, you're not going to play second base very well. You're going to be caught out of position." So this market, and this is another part of the conversation that we need to have, a market is very wide. It's very deep. There's a lot going on. And we got to find out when you are available and what we can do within those confines. And then we get it set up. And you say, and we have had this. We have had folks say in the Q school, "Don, I can only trade from 8:15 to 11:30." Okay, that's that. Okay, that's it. We've had people say that, just like, that's it. Then that's what we're going to do. We're going to set up your Q school, and it'll be open, and if you can do something else, but from 8:15 to 11:30, that's when you're going to be trading, and that's when the programs, and you're going to be shadowing, and that's what you're going to measure, and that's what you're going to do. Maybe it's even shorter than that. Well, then we're going to have to find out. That's what we're going to try to do. Why try to practice or do something or write a program for something that you don't need or can't do? But there are also some things that we've learned from teaching people too, right? So there are sometimes we have learned this. We have had some people do some things that they kind of are self-sabotaging. I call it self-sabotaging, and they torpedo their own efforts. So, and we have learned over the years, so we've had quite a few people now. So it's not, like Logan, wasn't the first, but it was very early still. We've owned Stock Market Caddy came out of the ground around 2012, 2013. Okay, everyone. It's just about 5 minutes of 4, and we just want to say thank you. Thanks for stopping by. Thanks for your questions. It's always a little difficult through the chat, so I hope I understood your questions and answered them, to your satisfaction. If you want to call and talk over the phone, real person, we love to teach, and we've gone through this with a lot of different people, and you know, um, it's always different, it's always unique, but um, a lot of it's the same, so it's not like our first rodeo, and we're happy to, and if it's a situation, quite frankly, if a person, I don't want to say it's in advance, but we have some questions as well, and if we get an indication that a person is not being realistic or it isn't a good fit, we'll say that, right? We're not, Stock Market Caddy is above and beyond what we do day in and day out, and we don't want to waste your time or ours. We really don't. And most of the time we can tell, like, almost right away though, like, we know this, software engineers do great, technical folks, do great, generally. So you're very welcome, Tina. Have a good rest of the day. And we're going to say goodbye now, and YouTube will shut down right at 4. Thanks again, Tina. We wish you the best. Hope you had a good day.